Let's talk to David Paul. He is the Managing Director of VectorVest UK. Very good morning to you, young David.
Yes, morning, Mus.
Right, we are going to talk about swing trading. I'm not a great expert in swing trading, but nevertheless, we've got a number of slides to go through. Let's kick off with the first one. Swing trading, spread betting, the USA. Sounds like a song to me.
Well, yes, it's trading in the US market is relatively new to me. I cut my teeth in the South African market. I went there to play rugby years ago, and in the UK market. And over the last, I suppose, 2 years now, I've been using VectorVest US, which comes with VectorVest UK, to take relatively short-term trades in the American market. And I found that relatively easy. Lots and lots of shares undervalued, growing their earnings strongly, that are in the throes of a strong trend. And then I want to buy them a little bit of a pullback and ride that momentum move up the page from 5 days, 13 days, 21 days of that order, bank a few bucks and do my best to get in at the next pullback. And some of the slides that I've got today, big brand names that everybody knows, seem to have pulled back to good levels, and there is the potential of a nice trade ahead for us.
Understood. Okay, so let's move on to the UK market timing. As viewers will know, you've got a short-term and long-term signal. What is the status at the moment?
Well, the short-term trend is up. Prices respected that last old bottom on the VectorVest Composite. The VectorVest Composite is an equally weighted index of all of the shares in the London stock market and on AIM. And it's a much broader measure of the market than the FTSE 100.
Right.
And it's respected that last low, and it's pushing up from that last low. The prices of the composite is up day over day and week over week, which is a good sign.
Okay.
So the short-term trend is up, the longer-term trend is still down. Aggressive players and certainly swing traders would certainly be putting their toes into the market at this stage. Very importantly for the London market, the commodity market seems to have held at support. Copper had a really good day. Yeah. And that's a bellwether for most commodity markets.
Right.
The other leading indicator is the Aussie against the Australian. The Aussie dollar against the dollar tends to lead commodity markets, and it's found very important support at a monthly fib level at 0.71. So I think as long as the Aussie against the American dollar can stay above 0.71, then the commodity market looks good. So some exceptionally good levels, and you can see over the last couple of days, all the big winners were commodity stocks.
Understood. Okay, well, let's move on to the FTSE 100. What's the fill position here?
Well, that's the fib level that I talked about last week.
You did?
That 72.30 level, which is 62% retracement of that last range, has held the markets pushing up from there. Harmonic analysts and fib analysts looking should see the Gartley pattern, the push plus the AB equals CD pullback, which is a very strong precursor of a strong move. So I remain optimistic, but I'm normally optimistic.
So 72.30, FTSE cash, key support. While we're above it,
I think we're pushing strongly above it. Anything can happen in this political environment, but I remain optimistic there, especially with the American market moving up strongly.
Okay, well, let's go across to the US chart. This is a weekly chart. What's the fill position on the US?
Well,
I would like to think you're long.
Well, yes, the American market is strong. It's breaking new highs. The S&P broke a new high, I think, yesterday, the day before. However, the worry is the lack of breadth, and it's moving up on very minimal breadth. And on our front page at VectorVest USA, there are still more shares on a sell recommendation than on a buy recommendation. But certainly the large market cap shares pushing up the page, taking the indices with it, that's for sure. But the worry is it's moving up on lack of breadth, which is telling me
dangerous, as we know.
Dangerous, thin ice. But nevertheless, we can enjoy the ride.
Okay, so we're going to go through a few stocks now that these you would consider having them in your portfolio right here, right now.
Well, I think that Amazon. I think we're talking here about swing trades.
So this is short term. These are short term ideas.
What I'm addressing this morning is short term ideas. Yes. For swing trades. Now, I was in Amazon a long time, and I actually got out at 2000, and it's pulled back a little bit now. It's pulled back to the last old high. It's pulled back in 3 waves, and I think if you see it moving up and breaking the top trend line, joining the last 2 short-term highs, then we've got a push probably to 2200 in Amazon. So certainly for a swing, could be the best position trade in history, I don't know, but nevertheless, I'm calling it for a probably a 10-15% move on the upside if it breaks these levels.
So you're bullish on the Amazon. Let's move on to Apple.
Well, Apple is, whereas Amazon on VectorVest is overvalued, growing earnings like hell, but overvalued. Apple is in fact growing earnings strongly, but still undervalued in our system. And remember, if Apple was on the same PE as Amazon, it would be a $5 billion company as opposed to a $1 billion company. So it's also pulled back. Now I've got a position in the share. If it breaks up over the last couple of highs, then I'll be adding to that position over the next couple of days. So I have a position on that share since the gap out of that ascending wedge that happened about 3 months ago. Love gaps out of wedges. I think Zach calls them the rocket launcher. If he sees a consolidation, then a gap out of the consolidation,
sign of strength.
He calls that a rocket launcher, and it's a really good name for it. But it's pulled back into that little flag type pattern, a 3-wave back, and I think it's just about to push up the page.
Understood. Let's move on to the next one, CNC.
This is a great stock. This is a great stock, undervalued on VectorVest, and moving in the throes of a strong trend. I use 3 moving averages to work out the trend, 21, 55, and 89. And I've been using those moving averages since before time began.
Okay.
The stochastic at the bottom is telling us that it's in an oversold position, and it's pulled sideways in what technicians refer to as a tight flag. That is a very strong precursor of a move up the page. There's also reverse divergence on the stochastic. So I've got great fundamentals.
And great technicals.
I've got a trend, and I've got an oversold position. I have no idea what's going to happen next.
Yep.
But the probabilities are reasonably good, and I would give that a probability of about 70% of moving up, assuming the general market doesn't do something silly. So 70-30 trading proposition. I am in the share for a long time, and I've been talking about that to all the VectorVest people on a Monday afternoon. I do a webcast to the VectorVest customer base every Monday afternoon, where I talk about what I'm doing myself. I have to make it very clear that although the shares are suitable for me, they're not suitable for everyone because of the FCA disclaimer. But nevertheless, that looks to me like a 70-30 proposition to move up the page.
Understood. Okay, let's move on to UVE.
Well, this is a smaller company, nevertheless a large insurance company. The green line is our valuation. The earnings per share is in the window below the price. The trend is strongly up. It's gone sideways in a little consolidation. And as I said to you in the preamble before we started, if that doesn't break up the page, I shall eat every book on technical analysis I've got. Yesterday it broke. I did this. I had to do this because of the deadline on I suppose Wednesday night's close, but in yesterday's close it actually broke that top trend line, defining that little ascending triangle. So I would expect that share to push up the page strongly from here. But remember, in all of these, I'm not suggesting a position trade. I'm suggesting a swing trade that could last, with any luck, 21 days
21
to make
days,
us 15 to 20%.
On that note, we've got the last slide.
Well, that's me, david.paul@vectorvest.com, and if you want to come along to our Monday afternoon webcast, just get a feel for what we do, then just send me an email and I'll send you off an invite.
On that note, thank you very much.
Most thank you.